Hi and welcome back to my final morning report charts pros on Friday the 17th of June with me, Richard Bear, market analyst at Asset Markets, looking at gold. And we've had, well, incredible turnaround on the day yesterday. We had a candle where basically we had a spike to 13.15, intraday sell-off to 12.78, so $27 of turnaround. Incredible intraday turnaround actually, and a failed upside break. So the question being, is this, well, I mean, from that failed upside break, or certainly the candle would suggest that that's a failed upside break, and subsequently we're going to remain or maintain in that range. Today's reaction though is higher, slightly higher, $6 higher. And that would question whether it is a sustainable sort of correction. When you look at the momentum indicators, you'd say stochastics turning lower or crossing lower. Haven't been confirmed yet as a sell signal, interestingly, but watch out for that. I'd say if we get further weakness today and another negative close, I think that then the momentum in this recovery could well have been lost. But for now, I think the fact that we moved, or we turned around so strongly on this one event in terms of market sentiment, and that one event being the murder of of the UK politician Joe Cox. I think that that sort of leaves the market all rather uncertain, because okay, the suspension of the Brexit campaign has happened, but it will continue next week, and will that one event materially change the momentum of the campaign? It's difficult to say at this stage, but certainly the gold price finding support again has sort of questioned whether this is a sustainable correction or not. Now, looking at the hourly chart, you can certainly say, or zoom out a touch, there is a pivot band actually around 1276 with these old highs from Friday last week, Monday early, but then became supportive. Let's get it around 1270, yeah, around 1276, 1277. Became supportive, and again supportive through this week, and again yesterday, and today. So that is clearly a market level that they're looking at. So 1277, 1276, 1277 is a key level to watch. So if that sort of closes again to the downside below that support, then you could argue that the momentum in this run higher has been lost, and you could see certainly momentum indicators have already started to look a bit more corrective, although the RSI didn't go below 30. If you see the RSI going below 30, then I'd say yes, that would be certainly more corrective. But for now, because that support has held around 1276, 1277, I'd say that we're still arguably in a positive outlook. But as I said, this could turn into a top pattern, which would then you'd then sort of measure the top. So it'd be around about sort of 20, 28, 29 bucks of downs of measurement projected downside. So that would be sort of around about the sort of 1250 area. So that could be the downside projection if you did see a closing level below that level, but below that pivot of 1276, 1277. But for now, we're sort of consolidating, and it'll be interesting to see, as I said, what happens in the coming days. Because if the Remain camp do sort of start to regain the momentum in their campaigning, or in the opinion polls, then we could start to see the gold price quite strongly lower in a correction, because much of this move higher in the last week or so has been driven by the fear over a Brexit, and that would then subsequently need to unwind. So I wish you good luck in your trading today, and I'll speak to you soon. Thank you.